Hi everyone, welcome to CoinBundle Conversations, where we bring you the leading investors and entrepreneurs in the blockchain space so that you can learn about how to invest in the space, how to learn about the most promising technologies, and how to be a leader in cryptocurrency yourself. Today, I'm really excited to have my good friend and investor, Prashant Fonseka. Welcome, Prashant.
Thank you.
Prashant is an investor and principal at Tuesday Capital, one of the leading funds in the blockchain space, and we're really excited to have you here.
Thank you. Thank you for having me.
So Prashant, let's get started. So how did you break into venture capital? Just tell me about your story. I know you were a teacher back in the day.
I was a teacher, so I have a little bit of an unusual path to venture. I don't know if anyone else who's followed the same path. So I was a high school entrepreneur. I liked technology and I liked starting businesses. I had a fairly large business when I was in high school. Nothing came of it when I went to college. The business was wound down, but I remained involved with the entrepreneurial community while I was in college. Post-college, I did Teach for America, and while I was doing Teach for America, I actually got recruited to start working part-time for a friend of mine from college who was working at a venture capital firm. The reasons for that were that I was an advisor to a number of startups, folks who had dropped out of college to pursue companies, which had actually been at least moderately successful. Some of the companies that I worked for got acqui-hired, had acquisitions, exit of some sort, real revenue, real businesses. Above that, I always just liked talking to entrepreneurs, and I always had a intuitive understanding of technology and also liked building it myself. So I did an internship my summer between my Teach for America years. The actual story is I had a good friend who now works at another firm who would basically call me quite frequently while I was teaching to ask me questions about companies that he was sort of considering and evaluating at the firm, just to get my opinion. Yeah. And I got to a point where I was just too busy doing teaching to actually talk to him regularly, and that's when he said, hey, what if we make this an official thing? To make this long story short, I never stopped working for that firm. After I finished TFA, I actually did another job for some time, but not too long after, ended up joining the firm full time, and the rest is history.
Awesome. So tell me about you as a teacher and how that's transferable to you as an investor. I know, because full disclosure, Prashant is an investor in CoinBundle as well, and he often teaches us certain interesting things to do as a startup. But how does it translate into your role as an investor?
Well, there are two things that I got very good at, and I had to get very good at to survive as a teacher. And teaching is one of the hardest jobs imaginable. It's harder than anybody could imagine. And I would say to date, it's still probably the hardest job I've ever had. But those two things are, the first is being exceptionally patient. I think you need to have a lot of patience and empathy when you're an investor and when you're working with startup companies, because it's hard. It's hard for everybody. The second is you need to take very, very complex concepts and break them down into something very simple. You need to be able to communicate to people and make sure that people actually understand. Before I was a teacher, I think I thought that people understood what I was saying very often. When you're a teacher and somebody's learning is dependent upon your ability to communicate concepts to them, you start to realize how bad you are at communicating concepts. So I've learned to, A, break things down to make them simpler, and B, maybe more importantly, constantly get feedback from the folks that I'm communicating with, if I'm in an environment where I'm trying to explain something to someone, to make sure that they do understand, because sometimes people give false signals. Nobody wants to seem like they don't get something.
Right, that makes sense. So you were teaching, then you transitioned full-time to venture investing. What was that transition like? How did you get started? Do you remember your first investment that you made as well?
I do. It's hard to say first investment that I made, because there was a long transition period where I was not making my own investments, but was really just part of the team and basically helping with our investments. It was smooth in some ways, because I already had familiarity with the firm and I had been doing the analysis work for quite some time, for 2+ years before I joined full time. The shocking, tougher part of it was when I started working full time and was really taking a lot of meetings and was in a position where I was actually passing on people's companies. It's really easy to be enthusiastic about companies when you're always a cheerleader and you're always just telling people like, yeah, it's a great idea, here's what I think you should do. It becomes a lot harder when all of a sudden you're actually rejecting almost everybody that you talk to, even though you are excited about what they're doing and you like them personally. I mean, it's pretty hard to find it's hard for me to find an entrepreneur that I don't like. I like almost all entrepreneurs. But at the end of the day, we can only invest in a handful of those companies.
Yeah, no, you have to give people a lot of no's and disappoint a lot of people, right? That must be tough as part of the job.
Yeah, definitely. And that's something I don't think you can have an appreciation for until you're actually on this side of the table making those decisions.
Yeah. So now you're working as a full-time investor. You're looking at a lot of deals. You're saying a lot of yeses and a lot of nos. How did you start evolving your thesis or themes about which type of companies to invest in?
It's been interesting. When you start off, or when I started off, and I think this is true for most people who start off investing, people start off with a somewhat rigid analytical framework, right? You go, okay, what's the team? What is the market size? What's the TAM and the SAM and whatever all those things are? You look at the competitive landscape, you start to dig into the unit economics. So it's this very technical, rigorous analytical process. And as you spend more time as an investor, what you realize is that when you've seen 60 companies doing the same thing, it actually becomes quite intuitive and relatively easy to pick out the best one from that space. So I think when you start off as an investor, it's very, very, very difficult to wrap your head around what is actually a good company or what's a bad company. And I found that I was pretty much wrong all the time, right? Like it's hard to say that my analysis was particularly, it wasn't that the analysis was bad, it's just that at the end of the day, investment decision usually isn't based on that alone. One thing you can come to from the analysis is understanding whether something is a really big market or not, which is very, very important. And most investors will say market and team are the core things driving investment decisions. And I would say that, for me and for our firm, that remains true.
Right. So that's great to hear. So now, now that you've been doing this for a while, for our viewers who are aspiring entrepreneurs or have their own companies, how do you suggest that they pitch to you, or what are the things that they should highlight that will make you care about the idea?
And are we talking crypto here, or are we talking anything?
This is anything.
This is anything. I'm looking for a few things. Again, I'm looking for, definitely it has to be a huge market and a huge problem, right? Because no matter how great the team is, it's really hard to get around a company if that's not true. When I'm evaluating a team, I think I'm not looking for people to have the right answer for anything, right? I think founders who take the approach of trying to come up with the right answer and tell the investor the right answer are probably not going to be successful when it comes to at least pitching me and our firm. What I advise people to do is to be really honest, to be very open about how you are thinking, how you have thought, what has brought you to where you are. That way, that enables an investor to really evaluate the personal characteristics of the founder, the motivations of the founder, how they are approaching problems. And that's the way that we assess people talk about the quality of a founder, right? This term, a good founder, gets thrown around all the time. What is a good founder? Yeah. I think that varies from individual investor to individual investor. But I think unless an entrepreneur lets their guard down and gets out of sales mode and into let's build a real relationship with an investor, it's impossible to come to that assessment.
That makes sense. And so now you've been investing. You've invested obviously in dozens of companies in Silicon Valley and abroad. Tell me the moment when you started getting interested in blockchain, both personally and then as an investor.
So there are a few discrete moments that I can point to. So the first time that we as a firm and me personally started to get involved and interested in blockchain was about 3 years ago. We had a person working on our team for an extended period of time. He was with us for about 6 months, maybe a little bit longer. He was working full time for that time. He was deeply immersed in the crypto space. And at the time it was still relatively early days for Bitcoin, Ethereum. It's not really, because they'd been around for some time, but the communities were still relatively nascent. And at that time, as he was looking into the space and he was evaluating different companies, I started to read books on blockchain. I started to trade things myself. I bought a little bit of Bitcoin. I bought a little bit of ETH. I started to transact. Trying to understand how the blockchain actually works. Both being able to understand a white paper and the theoretical construct of what a blockchain is, also understand in a day-to-day, what does it mean to actually execute a transaction? How do you actually interact with it as a real person? So I got really, really interested in that time. Although I would say that in that first inquiry into blockchain, I left not really knowing what the point of all of it was. Yeah. I found that it was rather difficult to transact. I wasn't sure what people were going to use the decentralized computer of Ethereum for, even though it was sort of intriguing concept. I wasn't sure why you would use that over something else. Right? So I had a lot of questions. I was sort of intrigued, but not necessarily convinced that first time. We decided at the time not to back any projects. That was the advice of our advisor, the person who had been working with us. He had advised that if we believed in the space more broadly, that we should just buy some of the actual cryptocurrencies, which all of us did. You know, of the 3 people on our team, the richest bought a bunch and then held on to it, and I think that became worth a lot of money. Yeah. You know, the poorer 2 members of our team, including myself, bought a little bit, and then it went up quite a lot, and then, but quite a lot was like 5x, and then we sold it thinking that was a crazy appreciation we had seen, and then, you know, little would we know what would happen later. Yeah. So the next meaningful wave was probably about a year ago. I think right around the time when, you know, the sort of big crypto, you know, Bitcoin/Ethereum run-up / everything else started to happen. I was having a conversation with an investor at another firm. I won't name because I don't know if he'd want to be named. And we were having a debate. And I took the stance of, all right, what are people going to use crypto for? And we started to talk about the economy, the fundamentals of transactions. And, you know, we were talking about Monero, which was interesting, this idea that you could have anonymous transactions and exchange value that way. You know, we talked about how on black markets and for, you know, sending money across borders and whatnot, people are already using Bitcoin as an exchange of value for that reason. Those are some of the real use cases today. And, you know, my friend made the point that there were always people that had an incentive to exchange value without having anybody watch, right? Yeah. And when he said that, I was like, wait a minute, there are some pretty fundamental reasons that people would want to have a blockchain for this one use case. And I couldn't find any flaw with that argument. I was like, there is a real need and demand. So at least for the exchange of value, I became completely convinced that cryptocurrencies would be useful for that. Since then, I think my thoughts have evolved on decentralized applications and whatnot as well, and I've actually come to find a fair number that I think are compelling and make sense as decentralized applications. But I think it's important to be picky about those. I think there are a lot of things that are out there that don't seem like they need to be decentralized still, and I tend to shy away from those.
Yeah, that makes sense. So what type of projects in your mind are the ones that you're more interested in? What are some of the themes within the blockchain space that you think deserve to be decentralized?
Okay, so themes, let's see. Themes it can be a little bit harder just because it so much depends on the use case and whether I think it really needs to be decentralized. That's probably the key question of why blockchain. So the basics of it are similar to everything else. It needs to be a really big market, it needs to be a big problem, something that I think a lot of people would engage with, right? The second point of it, which is probably the most important question for blockchain investing for me, is does this have to be on the blockchain? Right. Because my general viewpoint is that if it's something that can be done using not a blockchain, it's probably going to work more efficiently. Right. If somebody can convince me that it's the same basic process, but it's actually more efficient on a blockchain than using some sort of, you know, either non-cryptographic or non-decentralized approach, then, or centralized, I forget how I structured that, but then that's potentially compelling as well. Yeah. You know, I think Orchid, which we are a backer of, I think that's publicly known, is really interesting because I can think of many reasons that people would want to access the internet and access data without having people watch. And I think it makes sense to incentivize the people who are the nodes for taking on the compute costs, the bandwidth, any potential risks with running that network. I think it makes sense for them to be incentivized. And it also makes sense that there's no central, you know, entity that could be cut off to shut down the network. It makes sense as a P2P decentralized, you know, net. So, yeah, there are projects here and there, but I really have to evaluate every project as a standalone. It's hard to say there's a whole entire asset class that I would be interested with in the crypto space. Yeah.
That's interesting. So to you, it's all those years of training to be a venture investor that must be coming really in handy because a lot of the principles you're outlining for evaluating blockchain companies overlap with your traditional venture investing.
Absolutely. I think that they are actually very similar. I worry when folks say that blockchain investing is very different from venture investing because at the end of the day, the core business principles underlying them should be quite similar. Right? I worry about people who are just chasing immediate liquidity. Right? There's definitely a segment of the investment community in blockchain that is chasing hype and short-term returns versus chasing, you know, long-term, enduring. You know, we as venture investors, though we are investing in tokens and crypto-related companies, when we make those investments, we're not making them with the aim of trying to get out and make a lot of money in a really short amount of time. Just like with our traditional venture equity-backed companies, our aim is in backing companies that on the 7 to 10 year time frame will become really big, important, durable, sustaining companies.
Yeah, that's a really powerful point, because one of the things we want to educate our users is how to invest responsibly in this space. And we're seeing that there's a lot of people who have never invested before are trying to be venture capitalists without the training or experience that you would have. So how would you advise people who are just starting to invest in this space? How would you advise them to think about how to get invested in cryptocurrencies? And these are like the normal people who are not in technology, not in venture capital.
Well, I think, depending on what someone's background is, it could be really hard to evaluate something like the white paper on a technical basis, right? It can be very difficult to evaluate token economics. I think, there are a lot of publications that are writing a lot about crypto, but I think you need to be careful who you trust, right, and who you're reading. And I'm not sure that there's any one source that I would point to and say this is objective, credible, analysis. And I'd say the same thing is true about public equity stock. Yeah. Picking publications, right? Everybody has some kind of angle. I think the one thing that anybody can do is to really look into the backgrounds of the teams, where they're coming from, what they've done before, how long they've been interested in cryptocurrency, and really understand their motivations. And these days more than ever, because everybody has a Telegram group, right? You can actually talk to the founders of these projects, even some of the larger ones. So I encourage people to actually do that. Ask the tough questions. Ask the tough questions. Kick the tires, and really kick the tires on the people and their motivations. I think that, and the same is true in venture investing, right? At the end of the day, we can do all the analysis into the unit economics and the competitors, but when investors make decisions, it's based on the people. And as an investor, as a smaller non-institutional investor, as an individual investing your own money, I encourage people to do the exact same thing.
Right. And would you say people should invest in both ICOs or projects that are starting, as well as more established projects, or would you ask them to pick one or the other? How would you advise someone to get started on like hundreds of projects that are available?
I think it's important to have a diversified approach. I don't think anyone should put all of their money into any one thing. Right. I think, the ICOs are super, super risky, for sure, right? If you're putting money into Bitcoin and Ethereum, that's volatile. Those things might drop 20, 30%, right? Those are cryptocurrencies. You can also invest in tokens associated with some of the longer, more enduring, dApps and whatnot, right? And I think those all tend to be quite a bit more stable, and the likelihood of those going to zero is pretty low. With any ICO, the likelihood of approaching zero is actually quite high, right? And you really have to be aware that you might lose all of your money. So, I think the balance and the portfolio distribution for each person, it varies depending on their risk tolerance, right? If somebody really wants to gamble, if somebody's putting an amount of money that, for them, they're okay with totally losing, they can put all of it in ICOs. If they hit the right ones, if they catch the right wave, they might do very, very well in those investments. But I would never recommend that to anybody, right? If anything, I would recommend people to weight more heavily towards the more stable currencies, right? And there is a reality that the rising tide does lift everybody, right? As the cryptocurrency ecosystem develops, all of the tokens are going up in value, and the most stable ones are some of the oldest.
So as the next thing, would love to hear about Tuesday Capital a little bit more. What's your investment thesis for Tuesday Capital in the future? And in particular, is there a thesis for blockchain-based projects as well?
Yeah, absolutely. Excited to talk about Tuesday Capital because we just renamed our firm. We used to be a firm called Crunch Fund, and we just became Tuesday Capital.
So Prashant, you just launched Tuesday Capital. Tell me about why Tuesday Capital. How did you guys come up with the name?
Yeah, so we came up with the name, no surprise, on a Tuesday. What we realized as we had, we were weeks into the process of trying to come up with a name. We had a lot of false starts. We had a lot of things we were excited about. We are very straightforward, direct, and honest people. We didn't want a name that was trying too hard, but we wanted a name that was distinctive. Somebody, because it was Tuesday, brought up the name, well, how about Tuesday? It's Tuesday. And we sort of laughed, and then we went, you know what? That's actually, Tuesday sounds good. It's a good name. Nobody has a name like that. And the more we thought about it, the more we were like, wow, and Tuesday is a great day. In fact, what we realized very quickly was that Tuesday is actually the most productive day, right? And productivity is important when you're thinking about venture investing and building companies, right? Because when you think about it, Monday, you're just getting back from the weekend. Nobody's really excited about work on a Monday. I mean, even the most passionate entrepreneurs just have a slightly lower energy level. Wednesday is hump day. No explanation needed there. Thursday is just pre-Friday, right? And then Friday is Friday. You're ready for the weekend, right? Which only leaves Tuesday. And when we thought about it, we're like, wow, we always get the most work done on Tuesdays. When we realized what a powerful day Tuesday was, and how aligned it was to our brand, and the simplicity that we value and the directness that we valued, it didn't take us too long to come around to realizing that that was the right name for us. Now, as far as what we're doing at Tuesday Capital and our investing approach, again, in line with the name, keeping things very simple. We write $250,000 to $500,000 checks into early stage rounds in companies. Sometimes we're the first money in, sometimes we're not quite the first money in, but we're pretty early, right? We're investing in companies that are pretty much always pre-product market fit, where the founders have done something to impress us in terms of what they've built, what they've accomplished, some early traction and proof points, but where most importantly we are really excited about what we're doing. We think it's a huge market. We think it's a company that by itself could return our entire fund and then some, and where we just are in the same mind frame as the founders, right? Where we are really viewing the problem space and their solution in the same way that they are.
Awesome. And as someone who's been backed by Tuesday Capital, I'd recommend all of the entrepreneurs to reach out to Prashant. They're one of the best investors in Silicon Valley, and hopefully your inbox will be flooded with pitches very soon.
Thank you for the plug.
Yeah. Tell me
not asked for, by the way.
Tell me about Tuesday Capital and blockchain investing. I know you've made several investments in the space, including CoinBundle. How are you evaluating blockchain-based companies and tokens, or are you even evaluating them separately from traditional venture capital-backed companies?
Yeah, so we are evaluating them in almost the same way, right? There are some differences with the liquidity and investing in tokens versus equity. I would say that of our blockchain or crypto-related companies, it's almost about 50-50 whether we've invested in an actual token of some sort or whether we're investing in just a traditional equity instrument. But overall, the process is quite similar. Again, we add in that question of, is this really needed? Does it really need to be decentralized? But again, we ask the very similar question when we're approaching any company. So for us, it's really quite similar. We go through the same process. We do the same team diligence. The valuations are a little bit different. The investment amounts are a little bit different due to the liquidity and the nature of the instruments. Yeah. There are more regulatory things to consider with some companies, so we often have to do a little bit more work there. The co-investors that we're investing alongside, sometimes they're actually the same as equity investors, and sometimes it's a different set, when it tends to be more of the crypto hedge fund folks coming from that community. But overall, I would say the differences are not that big.
So if I'm a normal investor in cryptocurrencies, I've seen Tuesday Capital's investments, they're listed on the website. Is it a good strategy for people to go and invest in those type of tokens because they know you've done some due diligence for those companies?
Well, anything that we're backing, if we're backing it, that means that we are believers in that team. We're believers in what they're doing. I think we are, the one thing that I would say to anyone that's looking at our portfolio and thinking about backing those companies is that, we are taking the long view on all of these companies, right? And for individual investors that are taking the long view, again, they're going to be aligned to us in that regard. But for us, it's like a 7 to 10 year time horizon. We're not looking to trade these things live. We're not looking to sell them immediately. Right. Our intention as a fund is to, back companies that we believe in the long term.
Great, and actually that's the type of investing which we are trying to recommend crypto investors as well, which is like, don't try to day trade or make a quick buck against the hedge funds. Try to back in projects which you believe in the long term as well. And that's really what we recommend a lot of the CoinBundle users as well. So now I'm going to ask you a couple of quick fire questions along different things.
Sure.
How has investing in ICOs and blockchain companies changed, or is it challenging traditional venture investing, or is it changing how investors think about companies?
So I think it has changed how investors are thinking about companies in that, when mobile became a thing, when the cloud became a thing, as deep learning has become relatively easy to implement and scale across different types of companies and different contexts, right? Now any investor can consider with any company, how does the blockchain relate to it, right? With most companies, maybe the answer is it doesn't at all. With some, it either relates somewhat or is crucial to that company, right? So it has changed the landscape in that regard. Now to the question of, does the capital that comes from crypto, because a company can now ICO instead of raising venture financing, I haven't seen that happen in practice. It has certainly opened up new pools of capital. I think there's this weirdness around a company raising an ICO. Like what is the token actually, what does it mean, right? I think if an ICO becomes essentially a public sale of a company where the tokens represent equity in the company and are very clearly a security, it is potentially a little bit disruptive because it means that rather than only having to go to a limited pool of private investors, you can potentially go to anyone to raise money, right? There's a good and bad that comes from that. I think there are a lot of ways in which the crowd and the public may be a lot smarter than VCs, but I think there are also a lot of dangers that come with that, where a lot of folks who don't have the same amount of exposure and the same level of experience, might be fleeced in some way, right? So I would provide caution. I think if there are major events where people kind of basically get screwed with ICOs, that the excitement around that might diminish. I don't think it's been realized yet, this idea of replacing venture capital with ICOs. My view is that they will be complementary. I don't think anything will replace anything, but I definitely see ICOs in the long term. If certainty can come around this idea of what does ICO represent, is it actually ownership of the company? And if that's something that regulators are okay with, that becomes a really interesting way for a company to be owned.
And then I guess venture capital firms will start evolving in how they interact to participate in this way of investing as well, as you guys are leading the charge on that as well.
Absolutely.
Awesome. So you mentioned mobile as a trend, and obviously some people say this could be as big as the internet, some people say as big as the transition to mobile. What % chances do you think blockchain has to be as disruptive as mobile or internet? Because I hear views everything from 10% to 90%. Do you have a thesis on what are the chances of this being as big as the transition to mobile?
Interesting. Okay. So I think mobile is interesting because it's essentially a way of accessing the internet, right? The first internet was really internet via computers, and then mobile is internet via smaller devices, basically. So, I think, the internet revolution, the mobile revolution, the mobile was basically the next iteration of the internet and of computing. Blockchain's a little bit different. I'm not sure it's conceptually aligned. So I do think blockchain, I think the odds of it being very, very disruptive to some things are quite high. The things could include ownership of assets, right? That's something that it's very easy to imagine shifting to blockchains. There could be exchange of value, right? As has already been demonstrated by Bitcoin being used to transact all types of things. Not everything, because it's still quite cumbersome and difficult to transact Bitcoin or most cryptocurrencies. But for big things of high value where there's a strong incentive not to use traditional currencies, they're already being used. So I think Bitcoin and other cryptocurrencies already are highly disruptive and will be even more disruptive, I think, at the point where you and I are exchanging a cryptocurrency instead of some other type of currency with each other for a good or a service. Like, that is huge, right? But I think it's a little bit wrong to think of it as being similar to the mobile web, because it's a different type of technology. That's like saying was the automobile revolution as disruptive as the internet? It certainly impact people's lives quite a bit, but they're just not quite the same thing.
Yeah, makes sense. And how do you think it would impact emerging markets? I remember you telling me the story about how your grandmother was an early investor in Bitcoin back in Sri Lanka.
Yeah, well, it's interesting. Cryptocurrencies have given folks in developing markets who don't necessarily have the access, not necessarily, like they don't have access to invest in the types of investment assets that are readily available for Americans and folks in other developed countries, the opportunity to invest in these assets and potentially make returns. Again, it's volatile, it's very, very risky, but again, clearly people have made quite a bit of money. People will lose money as well, but more people will certainly make money. I think that's huge. It's unfortunately taken a long time for the regulatory to catch up, but we've managed to leapfrog a lot of these constraints and barriers through this technology. Again, I must add the caution of, the downside of that is, in the US we have lots and lots and lots of protections about the things that we can invest in, right? There are lots of, bodies that are governing and making it hard for people to get totally screwed over and invest in things that are scams by regulating it. Yeah. The downside of decentralized things is that they are completely democratic, they're completely open, anyone can back them, it's very hard to shut them down. But it shifts the burden from kind of the nanny state that's monitoring everything to the individual. Yeah. So I think it's huge. I think it's great that people have access. I implore people who are investing to, again, do the diligence because the burden is on them to pick the right things. But I'm a big believer in a free economy and that people should have the right to invest in assets like this. So
and that's
excited about it.
Yeah, and that's really powerful advice for a lot of our users who actually come from emerging markets. So I think it's really important to keep this in mind. So thank you so much for joining us, Prashant. This has been really valuable. Appreciate your time.
Anytime.